Think Making Tax Digital only applies to accountants? Think again. If you're self-employed or a landlord, this video could save you a lot of confusion. Let's break it down. Hi, I'm a technical officer from the Low Income Tax Reform Group, or LITRG for short. We're an initiative of the Chartered Institute of Taxation, which is an educational charity. Our mission is to help people who can't afford to pay for professional advice to understand the UK tax system. Basically, our team of chartered tax advisors take complicated tax rules and translate them into plain English so you actually know what's going on. Our videos give general guidance about the tax system. If you need personal tax advice, we popped a link below to our website which explains where you can get free and paid help with your taxes. And today we're answering the big question, who does Making Tax Digital for income tax actually apply to? Let's get into it. Making Tax Digital for income tax will eventually apply to self-employed individuals and individuals who receive property income, but only if your annual gross income from these sources are above a certain threshold. That's really important. It's not your profits. Gross income means your total sales and/or property income before expenses. Basically, it's the number that looks really exciting before you remember that you've had to buy it or pay agent fees and expenses to earn it. Making Tax Digital for income tax is being phased in over 3 years. Here's how the thresholds work, and at each stage you will need to follow the rules unless you're exempt. You should be using Making Tax Digital now if your total income is above £50,000 on your 2024/25 tax return, unless you're exempt. If this applies to you and you have yet to sign up to Making Tax Digital for income tax, then you should do so now without any further delay. From April 2027, the threshold will drop to £30,000 and that will be based on your 25/26 tax return. From April 2028, the threshold will drop again to £20,000 and this will be based on your 2026/27 tax return. The thresholds drop each year, basically like a really slow motion limbo competition. How low can you go? Well, it will be £20,000 by 2028. Those with a gross income of £20,000 or less from these sources are currently not within the scope of Making Tax Digital under the current rules. However, you can choose to follow the Making Tax Digital rules voluntarily if you like. These thresholds are worked out using the income shown on your previous tax return. That's the return that's due by 31st of January before the Making Tax Digital start date. For example, whether you join Making Tax Digital for income tax from April 2026 will depend on your gross income on your 2024/25 tax return. And whether you join from April 2027 will be dependent on the income shown on your 2025/26 tax return. When working out whether or not you're in Making Tax Digital for income tax, you might hear the term qualifying income. This just means income from self-employment or income from property. You do not include employment income, pension income, savings income, dividend income, or partnership income for now. If you only have these other types of income, you are not in Making Tax Digital under the current rules. Partnerships themselves aren't yet within the scope of Making Tax Digital for income tax, but individual partners may be affected if they personally have qualifying income, that is either self-employment income or income from property that's above the threshold. For example, a partner in a trading partnership who personally receives rental income of more than £50,000 would need to follow the Making Tax Digital rules from April 2026, unless they are exempt. So what actually changes under Making Tax Digital for income tax? Instead of doing everything in one go at the end of the year, you will generally need to keep digital records, submit quarterly updates on your self-employment and all your property income and expenses, and then do a final end-of-year tax return, all through compatible software. And here's the important bit. You will not be paying 4 tax bills every year. The main payment dates will remain the same as what they are right now. Let's look at some examples, and don't worry, there's no maths test at the end, I promise. Boris is self-employed. His 2024/25 tax return shows self-employment sales of £55,040, expenses of £32,226, and a taxable profit of £22,814. For Making Tax Digital, he only needs to look at his self-employment sales. £55,040 is above the £50,000 threshold, and therefore Boris will need to use Making Tax Digital from April 2026. Ravi is self-employed and has a part-time job. His 2024/25 tax return shows that he has self-employment income of £42,000, self-employment profit of £28,000, and he has an employment salary of £10,000. For Making Tax Digital, he only needs to look at his self-employment sales. £42,000 is less than the £50,000 threshold, and therefore he will not need to join Making Tax Digital from April 2026. Ravi's 2025/26 tax return shows self-employment sales of £34,000, self-employment profit of £16,000, employment salary of £10,000. As his self-employment sales for the 2025/26 tax year is above the £30,000 threshold, he will need to join Making Tax Digital from April 2027. For more complex and detailed examples, go check out the Making Tax Digital Hub on our website. There's a link in our description. Here's what to do now. If you're unsure when exactly you'll be required to join Making Tax Digital, check out our guidance called When Does Making Tax Digital Start for Me? It will walk you through everything you need to know and how to join Making Tax Digital. You should now check if you have self-employment or property income. Work out your gross income from those sources. Check if your gross income on your 2024/25 tax return from those sources is above the threshold of £50,000 for April 2026. And also check your total gross income on your 2025/26 tax return to see if it's above the £30,000 threshold for April 2027. Check if you might be exempt from Making Tax Digital. If you're not in Making Tax Digital, keep using self-assessment as normal. As the thresholds are lowering over the next couple of years, you will need to keep checking whether or not your gross income is above the threshold to start Making Tax Digital. Remember, if Making Tax Digital doesn't apply to you yet, you do still need to continue to use self-assessment tax returns as normal. And this video is just the start. We've got a whole series of in-depth explainers coming up, so go ahead and make sure you hit that subscribe button to make sure you don't miss out.
When working out my gross income, do I include pension income?
No.
When working out my gross income, do I include savings interest or dividends?
No.
I'm an employee and a landlord. Does Making Tax Digital apply to me?
Only if your rental income pushes you over the threshold.
I'm a landlord but file a paper tax return. Will I need to use Making Tax Digital?
Yes. If your rental income is above the relevant Making Tax Digital threshold, you will need to use Making Tax Digital. If you are digitally excluded, then you may be able to apply for an exemption.
My business makes a loss. Do I still need to use Making Tax Digital?
Maybe. It's based on gross income, not profit. Therefore, if your gross income is above the Making Tax Digital threshold, you will need to use Making Tax Digital.
I'm planning to stop renting my property in the next couple of years. Will I still need to use Making Tax Digital?
Yes. If your gross income from property is above the Making Tax Digital threshold, you will need to use Making Tax Digital unless you're exempt.
I'm self-employed but file a paper tax return. Will I need to use Making Tax Digital?
Yes. If your gross income from your self-employment is above the relevant Making Tax Digital threshold, then you will need to use Making Tax Digital. If you complete a paper tax return because you were digitally excluded, then you may be able to claim an exemption.
I'm planning to sell my rental property in the next couple of years. Will I still need to use Making Tax Digital?
Yes. If your gross income from property is above the Making Tax Digital threshold, you will need to use Making Tax Digital unless you're exempt. So remember, Making Tax Digital for income tax will apply if your gross self-employment and/or property income is above the relevant thresholds. Making Tax Digital for income tax can sound daunting, but really it comes down to what type of income you have and how much of it there is. And don't forget, you're not on your own. If you've got a question, worries, or just want something explained in plain English, drop a comment below and I'll try and answer it in my next video. If you want clear, simple guidance on everything Making Tax Digital, head on over to the LITRG Making Tax Digital Hub on our website. It's packed with everything you'll need to know. And remember, LITRG provides general guidance, not specific advice. If you need help with your own situation, it's important you get specific advice based on your own personal circumstances. We have a Getting Help section on our website which explains where you can get paid and free advice about tax. Thanks for watching, and don't forget to like and subscribe for more simple tax explainers. Catch you in the next one.